Thank you, Karel. Thanks for your kind introduction. And thank you, Daniela and Exprim, for having me. It's not the first time I'm at your events, but it's been a while. So very nice to follow. And good morning or good afternoon, ladies and gentlemen. Very happy to be here in Vienna. Good to follow what Michaela was saying. As often I do, I agree with her. And on sustainable finance issues and investment issues, I think we have many things in common as institutional investors, same goals. In the program, my title, my presentation or my speech is defined as pension funds as providers of retirement income and as investors, and I will go into the investment issues and sustainable finance investments. But a few words about the pensions landscape, because I heard that most of the audience here are from insurers. The retirement income for most in Europe still is based on Social Security pay-as-you-go pensions, and of course we know, and especially in this Central Eastern European region, the old age dependency ratios because of the demographic aging is a huge challenge, and it puts in question the adequacy of pensions, and the risk of poverty is real. There's discussion about what are the unfunded pension liabilities, and in public sector pensions, I think that's a huge issue, and what would we do with even if we knew what that is. We will have later this year, quite soon actually, every 3 years the European Commission publishes reports on aging and then on pension adequacy. And soon we will have very up-to-date information about the situation with the population aging and what are the issues with retirement income. And so there will be many big challenges. We know that the birth rates are extremely low in big countries like Italy. So all in all, it means that funded pensions, their contribution to retirement income is big, and it's increasing if we want to have sustainable and adequate pensions. People need to save. They need to save now, and they need to save more in different ways. And of course, occupational pensions are important, and also personal pensions are important in this, and other types of savings, like the Polish have introduced a voluntary private savings product, which they don't call a pension, but it contributes to the same issue. So this is a big and urgent issue, and the underlying the big issue, the responsibility of pension funds is to provide for retirement income. So that is always what we emphasize, that the basic fiduciary duty of pension funds is to pay pensions. And in addition, of course, there are other things that need to be considered. In the pensions landscape, there's a big shift in Europe and in other parts of the world as well. It has in many cases already happened, from defined benefit pensions to defined contribution. And what's happening in the Netherlands in the next couple of years is really changing the landscape. And this is really relevant if we're looking at the issues and in the end investments. If and when risks are increasingly with the individuals, how are risks assessed? What kind of information is given? What is the role of the individual in deciding on investment issues? So after this shift, the solvency issues are no longer important as they were before. We had many underfunded pension fund countries. When UK was still member of the European Union, they had many underfunded defined benefit pensions. We had big debates about solvency and Solvency II and its relation to pension funds, but that's no longer important. Karen, when you opened this morning, you said that Solvency II is good for you. I would say Guinness is good for you. So
it's not the same, I think.
No, maybe they're both good for you. Then there are other big issues. Gender pension gap is a real big issue, needs to be dealt with. EIOPA has raised this, and how do we deal with this? Is underlying labor market structures that result into much lower pensions for women than for men. The gender pension gap is twice the size of the wage gap. So what is the role of pension system in this? That's something that needs to really be considered. Better coverage of funded pensions may help many people in this regard, but it's not automatic. It's a very difficult issue. If we look at the latest reports on this issue, you can see that Estonia has the lowest difference in pension gap, but it has the highest risk of poverty. So everybody has low pensions and most people are in the risk of poverty. Luxembourg has the highest gender pension gap and the lowest risk of poverty. Luxembourg doesn't have many pension funds, but they have a very low risk of poverty. The Dutch have a lot of pension funds, but they have high gender pension gaps. So it's really a very difficult issue, but a real problem that needs to be addressed. Personal pensions are important for many because many are not, and increasingly are not covered by occupational pensions. We have the pan-European personal pension product, but that clearly hasn't been a success this far. There's only one Slovakian provider operating in 4 countries, so that remains to be seen what happens. Cross-border pensions haven't worked. There's some people are thinking about having a pan-European occupational pensions. That seems quite a tall order, not very feasible, as pensions are very much based on national social labor law and national taxation legislation, and not the competence of the European Union to legislate. So it's really, really big issues. Petra, not Petra, but Michaela was just saying, I'm sure you were saying, Petra, as well, but Michaela was saying that we will have the new commission and we'll have the new parliament. And it's interesting to see that the present commissioner, McGuinness, has been referring to the need to build also occupational pensions, pan-European occupational pensions to create a better capital markets union and better capital markets in Europe. So it'll be interesting to see what kind of policies the European Union will have for the next 5 years. On sustainability issues, for the last 10 years, of course, the Commission in Europe has been putting in place this legislative framework and really pushing the policy of sustainable investments and relying very much on having the private capital as part of this project. It's an important policy initiative. I think pension funds, they support it. Pension funds are natural, universal long-term investors. Universal investors meaning that they are big institutional investors that cannot step outside the systemic risks in the financial markets. So that is clearly important, that in the sustainability issues as risks, these are, like climate change, is a systemic risk. And as a long-term universal investor, these are relevant for your risk management. And we already have in the European Pension Fund Directive in place since a few years the requirement to consider ESG risks in your investments and in your governance. In the investment policy, it's not an obligation. You can do it, and if you do it, you need to disclose. But we are moving into this direction where this sustainable investments, ESG investments, will become a legal requirement, a part of the fiduciary duty. I think it's widely, globally recognized that the ESG risks, material ESG risks, are part of the fiduciary duty. The fiduciary duty of a pension fund is to look at the long-term interests of the members and beneficiaries. And of course, material risks are relevant in the long-term interest of members and beneficiaries, and thus it is part of the fiduciary duty. And we can see that the legislation also for pension funds is moving into this direction. Of course, for pension funds, the autonomy of investments is important, that they can decide how they invest and where they invest. But the basic issue of understanding and regarding ESG issues as risks, and then taking those into consideration in the investment policies, they are important. There is an ongoing review of the European Pension Fund Directive. Of course, it only covers those pension funds that are within the scope of the European Pension Fund Directive. So there are many other pension funds based on national legislation, or pension funds that are in the form of insurance companies, whether they are insurance companies within Solvency II or, like in my own home country, Finland, outside the scope of Solvency II. But there are many different forms. But European Pension Fund Directive, IRP 2, is under revision, and it's important for many, like the Dutch, German, Belgian, Irish pension funds. They are within the scope. And there are many issues that are relating to the sustainability issues. And also in connection to the shift towards defined contribution, where the risks are with individuals, what should be disclosed in the pension benefit statements on sustainability issues. That's one of the issues. Introduction of double materiality also to pension funds, which is already in place for insurance companies. That's one of the issues. And then, of course, looking at the basic fiduciary duty and how to broaden that, as I said, into ESG issues. All in all, I think pension funds, most of them already consider ESG issues one way or the other in the investments. I mean, they have to in the risk management, but in the investments, most of them do. They struggle with some of this legislation because there's been so much of it during the last years. It's a totally different regulatory landscape than 10 years ago. Many pension funds are small or medium-sized, but the really small funds exist, and they struggle with the legislation and changing rules and requirements. And then, of course, if there are inconsistencies in the rules and regulations, then that is really problematic. So, like what Michaela was also, in my understanding, what she was calling for is stability and consistency in the regulatory framework, and that's really important for pension funds. And all in all, for pension funds, of course, as investors, it's important that they can contribute to economic growth, and they can invest in the real economy, to growth and employment, and they can and they are stabilizers in the financial markets, and they wish to promote ESG for all the good reasons. Many are already signatories of the UNPRI, and of course then they have, based on this, responsibilities to do this and to engage with other investors, and I think the development in sustainable investments of pension funds has been quite remarkable during the last 10 years, and I look forward to seeing it going further as well. Thank you.